Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello, welcome to Q&A. I'm Analyst Jiang. Before class, remember to like, subscribe, and share. If you have investment questions, leave a comment. If I don't answer today, I'll follow up with everyone in tomorrow's class. Alright, let's look at today's investment highlights. Important economic data releases and events are on this Thursday and Friday. Many data and events, so pay attention. With the US stock market at a high level, a misstep could have consequences. Even a slight disturbance could put significant downward pressure on the stocks you hold, so everyone should pay close attention to the relevant information. Alright, let's first look at today's investment highlights. The first is, what does the September interest rate indicator point to? And also, how far will Trump's black hand reach this time? As for the September interest rate indicator, we know that tonight and tomorrow night, Fed Chair Powell will be giving a speech at the Global Central Bank annual meeting. The entire Global Central Bank annual meeting will kick off after Jackson Hole, starting today and lasting for about 3 days until Saturday. Central bank governors from Europe and the US will be discussing and showcasing their monetary policies. They'll also talk about economic data, inflation, and even international cooperation, so these topics are especially important because they have a big impact on the stock and currency markets. Now, what's the other key indicator? The other key indicator is the Federal Reserve's monetary policy meeting minutes, which were just released early this morning. So, what exactly was mentioned in these meeting minutes? The content here will definitely have some overlap with what Powell will talk about this coming Friday. There will be some similarities and some things that aren't so interesting. And all of this will once again influence the direction of the Fed's interest rate decisions around mid-September, specifically on September 18. So everyone really needs to pay special attention to the Federal Reserve's meeting minutes, and also keep a close eye on Powell's speech this coming Friday. In addition, since we're talking about Powell and the Fed, of course we have to mention Trump. Trump has always wanted to replace Powell as the chairman of the Federal Reserve. Unfortunately, Powell won't be stepping down until May of next year. So, in the meantime, how much room is there for maneuvering, especially for Trump? Of course, Trump really wants to make some moves, like replacing key figures. And if he can't replace the chairman, then at the very least, he'll try to swap out related officials, whether they're board members or committee members, and fill those positions with his own people. Today, there are even rumors in the market that Trump is once again reaching in behind the scenes. But this time, it's not targeting Chairman Powell. This time, it's aimed at the board member. What exactly did Trump do to board member Cook? It's really going to extremes. I'll fill you in on the details in a bit. And after this move, is there really a chance for Trump to arrange his own people among the Federal Reserve officials? Does he really have the power to control the appointments of hawks and doves, and can Trump actually get his way and push for rate cuts? Let's keep watching to find out. Now, as for the industry side, what about Musk? Is Musk's political dream really over? Is Director Deng's dream really over? Has it truly come to a halt? According to today's news, the Daily News mentioned that Musk might be easing up a bit on the formation of this new political party, possibly shifting his focus to his own related industries instead. Is this news true or not? I'll give you more details on that in a bit. If it really turns out to be true, and Musk really does shift all his focus back to his main business and stays out of politics, then of course that would be a more positive sign for the stock price. But whether it's true or not, Musk will clarify that for everyone today. Another important piece of earnings news, at the end of this month, on August 28th, Nvidia's earnings report will be released. Nvidia is very important. Among the so-called Magnificent Seven, it's considered a very proactive representative, especially as the leader in AI. Now, the last of the Magnificent Seven's earnings reports will be released at the end of August. By all accounts, this earnings report should still be quite impressive. However, today, an investment institution in the market actually issued a warning, suggesting that Nvidia's earnings might turn out worse than expected. So, what is this expectation based on? If you hold related AI concept stocks or Nvidia shares, what should you do? We'll talk about that on tonight's show. We'll analyze all of this. Alright, let's have some fun. Hello everyone, this is Anna saying good evening to Hui Juanjuan, Flying Fish, Ming Ming Ming, and SY Lu. Now, let's take a look. This afternoon, I got fresh data from the Eurozone. It includes the Eurozone's August Manufacturing and Services PMI. The preliminary figures were released at 4 p.m. These two data points are actually pretty good. They both exceeded market expectations and the previous values, coming in above 50. Generally, when we look at the PMI data, that is, the Purchasing Managers Index, if it's above 50, it usually indicates expansion in the near term. If it's below 50, it suggests the economy is leaning toward contraction. Now, looking at the Eurozone data, since they've been cutting interest rates one after another, the Eurozone has been continuously lowering rates, in fact, whether it's in manufacturing or services. These purchasing managers are generally more optimistic. So, as we can see, under the stimulus of these rate cuts, the PMI for both manufacturing and services in the Eurozone, which was released this afternoon, is at least above 50. Manufacturing came in at 50.5, and services even climbed up to 50.7. As for the United States, the US part is especially important, because tonight the relevant S&P wink with tongue sticking out global PMI data for the US will also be released. So let's all take a look together when it's announced at 8:30. Alright, hello Cuckoo Liwan and Jeff Lingwan, good evening. At 8:30 later, there are a few data points. The first one we'll look at together is the US weekly initial and continuing jobless claims. This is a regular high-frequency data released every week. Last week, the number of initial claims was 224,000, and the forecast for this week is 225,000. In fact, there's not much difference compared to last week. As for the continuing claims, the previous value was 1.953 million, and the forecast is slightly higher at 1.96 million. So, what will the actual numbers look like? We'll take a closer look together at 8:30. But based on the changes in employment and unemployment numbers over the past few weeks, generally speaking, like I said before, the number of initial claims mostly falls between 210,000 and 230,000, and right now, this data clearly hasn't changed. The specific number of continuing claims has stayed between 1.94 and 1.97 million, so there hasn't been a significant increase or decrease. So, there's no sign of the job market cooling off dramatically or a collapse happening at the moment. However, when it comes to non-farm payroll numbers, those figures for May and June have been significantly revised, and that's what's making the market worry about the overall situation. The concern is whether the job market is really as robust as Trump claims, because the scale of these revisions has been huge. I remember, I think it was in May or June, the original number was around 144,000 to 147,000, but then it was slashed all the way down to about 14,000, basically cut in half, a 90% drop. So the downward adjustment was extremely significant. That's why the non-farm payroll numbers are a data point the market is particularly worried and concerned about. Oh, and usually this data is released on the first Friday of every month, so, the first Friday of the first week, once a month. But the initial and continuing jobless claims, which will be released later, are published every week. So, besides keeping an eye on that at 8:30, what else should we pay attention to? There's also the ISM Manufacturing Index, which is a bit more neutral. This one isn't very important. The previous value was 15.9, and the forecast is 7. This will also be released at 8:30. Now, another more important data point comes out right after our show ends, around 9:45. There's the preliminary S&P wink with tongue sticking out global manufacturing and services PMI for August in the US. For the services sector, the previous value was 55.7, and it's expected to dip slightly to 54.2, but at least it's still above 50. Just remember, anything above 50 means the economy is still expanding. But it's not just about being above 50, where above 50 matters. Is it 51, 52, 53, or is it 58? That's a big difference. The previous value was 55.7, and the expectation is 54.2. If tonight's US PMI data can hold around 54, then it's basically holding steady, and that's not particularly bearish for the stock market. But if it drops sharply and gets close to 50, if it even falls below 50 and turns into contraction, then the pressure on the US stock market tonight will be more on the bearish side. Okay, because with the recent economic data, you have to understand that the way recent economic data is interpreted has changed. Now, good economic news tends to give more support to the bulls in the stock market, because what does it mean to remove? It means eliminating concerns about an economic recession or a hard landing. So, when interpreting recent economic data, as long as the news is good and exceeds expectations, it will actually be a positive for the stock market. Pay special attention to this, especially in the services sector. In the US, 70% of industries are related to services, so this data is relatively more important. As for the manufacturing sector, the previous figure was 49.8, and the expectation is 49.5, still below 50. If this data, when it's released at 9:45 tonight, turns out to be not bad, if it rises above 50, then of course it will be interpreted as a positive for the US stock market. Also, at 10 p.m., the US July existing home sales total will be released. The previous figure was 3.93 million units, and the expectation is 3.92 million units. This data is more related to the real estate sector, so its impact on US stocks or the stock and currency markets is relatively low, pretty minimal, so you can view it neutrally. Lastly, at 10 p.m., there's also the Conference Board Leading Economic Index, with a previous monthly rate of -0.3 and an expected slight increase to -0.1%. So between 9:45 p.m. and 10 p.m., there are about 3 data releases. Among these 3, just a reminder for everyone, the S&P wink with tongue sticking out global manufacturing and services PMI data for the US will be the most important to pay attention to. Then, at 8:30, we'll take a look together at the weekly high-frequency data on jobless claims and livestock and poultry numbers. These are some of the more important economic data points tonight, so we're giving you a preview in advance. Alright, let's turn back and take a look at the industry and economic changes. Also, good evening to Melissa Chan, and what's this? AAE Frida, is it E Frida Wang? Good evening, good evening, good evening. Sorry if I mispronounced your names. And to Ting 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 Zheng, good evening, good evening. Sometimes when I see your English names, after they're written out, I'm not sure how to pronounce them. If I get it wrong, I'm worried about mispronouncing and feel embarrassed. So if your name is written in Chinese, I'll get it right, but if I accidentally mispronounce an English name, please be understanding. Some people have many different names, but that's okay. Just keep leaving your comments like this. If you have any investment questions, feel free to leave them. If I don't have time to answer, there's always tomorrow. That's all for now, but there's still tomorrow. Let me remind everyone, next week, on Wednesday, I'll be at a branch office to provide some services. Next Wednesday, I'll be holding a small investment seminar at the Taipei branch. The main focus will still be on Taiwan stocks, but I'll also touch a bit on macroeconomics, talk a bit about Taiwan stocks, and share some information about certain industries in the US stock market as well. So if you're interested. If you want to do some comparisons or actually have some in-person exchanges, or if you want to hear some investment-related information, you can just get in touch with the staff at our Taipei branch for more details. That's next Wednesday, on August 27th. Because our instructors take turns, right? If we do a live stream this week, then basically next week we'll be visiting all the branch offices around the country. That's pretty much how it works. Okay, let's take a look. The Fed minutes, the Federal Reserve's meeting minutes, were released early this morning. They're actually a very important indicator for interest rate decisions. Especially starting today, there will be global meetings, and tomorrow there might be some statements or related talks. Then, on September 18th, the next meeting is coming up. There's still a little over half a month to go, so there's still some time left, a bit more than half a month. But you can treat it as a leading indicator, a kind of weather vane. So what did the July meeting minutes mention? The July meeting minutes said that the US economy continues to slow down and the labor market is relatively weak. Most officials believe that the risk of rising inflation remains a challenge. In other words, even though they think the labor market is soft, they are actually more concerned about inflation surging. What they care more about is the situation of rising inflation. They're more worried about that, more than other things. And they emphasized, most of the officials emphasized, that if inflation continues to move toward the 2% target, if it keeps heading toward that 2% goal, then what will happen? Monetary policy will turn more accommodative. But on the other hand, if they find that inflation isn't consistently cooling toward 2%, then they won't rush into easing policy. In addition, these officials are still debating whether tariffs have a one-time impact on inflation or a lasting effect. So overall, judging from the statements of many officials, because at the moment, it seems that tariffs don't seem to have pushed up inflation that much, or at least not by a lot, but we still want to remind everyone. In fact, since August 7th, global tariffs have really increased from at least 10% to 20%. In this situation, some tariffs might be 10%, some could be 50%, and the rates vary, some higher, some lower. From April 9th to August 7th, during this period, tariffs around the world have gradually increased, and in some countries, they've more than doubled. So, it's reasonable to predict that inflation will indeed start to rise, most quickly from August, or at the latest, beginning in the fourth quarter, and it should quietly start to pick up. In the case of US tariffs, since costs are going up, when tariffs increase, import tariffs go up, and manufacturers' import costs will rise. When manufacturers' import costs go up, they either have to absorb the cost or pass it on to consumers. If they pass it on to consumers, prices will inevitably go up. This increase will be reflected in the CPI and in the Producer Price Index, PPI. Whether it's CPI or PPI, these numbers will go up. Now, whether this increase is temporary or persistent is something officials still aren't sure about. They need to keep monitoring a lot of data over several months. So overall, most officials still believe that, at least for July, for now in July, keeping things unchanged is appropriate, keeping things unchanged is good. Now, here's the key point. You might say, teacher, this Fed meeting, it really does serve as a kind of weather vane, and it does seem pretty neutral, maintaining a neutral stance, maybe even leaning a bit hawkish, sticking with a tightening mindset. So does that mean Powell's speech tomorrow will be exactly the same, following the July Fed meeting minutes to the letter, not missing a single point and just sticking to this plan? Actually, let me tell you, there's a 60 to 70% chance it will go this way. There's a 60 to 70% chance Powell will stick to the original Fed minutes, and the content will be relatively neutral. Keep things unchanged, monitor inflation, and respond based on the economic data. But since this is the July meeting, from July to August, there happened to be an additional set of economic data. Oh, right at the beginning of August, there was an extra economic data release. What was it in August? At the start of August, they happened to announce something, specifically the non-farm payroll data and the unemployment rate. And this non-farm payroll number was significantly lower than expected, and it was also substantially revised. So the issue is this. Will Powell's speech tomorrow night, aside from maintaining a neutral stance or a neutral to hawkish stance, basically, keeping things unchanged, will he perhaps, just maybe, bring up the more pessimistic non-farm payroll data from early August? Will he mention that the job market seems a bit sluggish, a bit weak? If he does bring it up and says, well, at the moment, it looks like the labor market is weaker than what the Fed expected, a bit on the soft side, then going forward, it's possible they might consider making some adjustments to monetary policy to stimulate the economy and boost the labor market. If he brings up this kind of content, saying that because the labor market is relatively weak, they're preparing to make some monetary policy changes, leaning toward easing, then that would be a bit dovish, a bit more accommodative. If that happens, it would be more positive for the stock market, since he's mentioning these points. If they're willing to cut interest rates, whether in September or December, and this point is mentioned, then it would be a positive for the stock market. But if, tomorrow night, Powell is still as tough and rigid as before, just sticking to the meeting minutes, saying that the July meeting is about, the US economy slowing down, the market is weak, and what else? And that inflation still has upward risks, so they won't rashly shift to a more accommodative policy. And as for tariffs, whether they're a one-time thing or ongoing, that still needs to be observed. If he remains rigid and inflexible, then the current situation for the US stock market will just be maintaining high-level fluctuations. The chances of making another push higher aren't great. Why? Because his stance is to remain neutral and unchanged. If he stays unchanged, then on the contrary. Let's say, unfortunately, just hypothetically, what if Powell's speech tomorrow is really tough, extremely tough? He might say, wow, our inflation is still very high, so besides keeping rates unchanged, it probably won't happen so soon, and we don't plan to cut rates in September either. Basically, it's a hawkish stance among hawks. That would be bad news for the US stock market, okay? So that's why I say this is like shifting the weather vane. If you take the July Fed meeting minutes, just treat it as a kind of standard version, a baseline, okay? Anything more dovish than that would be positive for the stock market, while anything more hawkish would be negative for stocks. If it's about the same, then it's considered neutral. So that's how it works. It's very important. Besides serving as an indicator for Powell's speech tomorrow, these two things combined will also play a key role in shaping the direction of the September interest rate decision. They provide a basis for discussion and give us some room for imagination. You can try to find some clues or patterns from here. So, I'm sharing this with everyone. Just now, in the early morning, the content of the Fed minutes was released, and it leaned more toward neutral, slightly dovish. But what happens next? I think tonight there will be a series of officials giving speeches one after another, and then tomorrow there's Powell's speech. We'll also remind everyone about it on this program, because, well, I'm not sure if Powell will speak in the morning, at noon, or in the evening tomorrow. If we have time to explain and interpret it for everyone, we will. If not, that's okay. If we don't have time, just remember what I told you about the meeting minutes, use that as a reference. Whatever Powell says, he'll have an idea which direction the stock market might go. After all, the stock market right now, to be honest, is at a relatively high plateau, a high point. At historical highs, I'll say it again, no matter what Powell says or how monetary policy is adjusted, the fact is, we're at historical highs, at a historical peak. Whatever you do at these levels, you shouldn't be going all in on stocks. You definitely shouldn't be putting 100% into stocks. When prices are high, you should sell a little. Every time the market hits a new high, sell a bit and put it in your pocket. Every time there's a new high, sell off a portion. Selling off a portion works well, sell half, 3/4, do it in batches. Institutional investors operate similarly, they make their moves in batches. They sell in batches, build positions in batches, and sell in batches. They don't go all in at once, buy everything, then not buy again for 2 years. That's not how it works. Even Buffett, when he buys stocks, does it gradually, keeps buying over time, and when he sells, he does it gradually too, selling bit by bit, continuously. It's about making gradual adjustments, in batches. So, everyone needs to keep this concept in mind, because when investing in stocks, this approach offers more flexibility. With more flexibility, and considering the current market is at a relatively high historical level, it's a reminder, when the market is high, take profits on your long positions. When the market is high, just take profits on your longs. There's no need to be overly aggressive about shorting right now, because at the moment, the market isn't in a bearish trend, it's not a bear market. Trump is also generally more bullish, and the current economic data and monetary policies are, at the very least, being interpreted as leaning bullish. So, in this kind of situation, you really won't gain much by shorting. If you try to short, you won't get much out of it in the short term. Sometimes the market might go up for 10 days straight, and only occasionally pull back for a day. Those 10 days of short positions you took before are meaningless. Even if the market drops, you might not make up for your losses. It's best to stick with the original bullish trend. Where is the bullish trend? Just follow the trend, go in the direction of the trend. Let me put it this way, wherever the trend is, don't go against it. Instead, when you're following the trend, you need to know how to buy and sell in batches. That way, you'll have a better chance of making money. So, let's put it this way, where share. Good evening, hello. You still have the verdict, and tonight there's also Ken Wu, hello. Alright, beginners are learning as they go. Let's all stay here, listen, watch, learn, and communicate with each other. Alright. My general view from yesterday, just sharing, that's good. Anyway, yesterday, we spent quite a bit of time explaining to everyone why the Taiwan stock market dropped over 700 points. Like we just said, some people think that. Some people think that TSMC might be getting invested in by the US government, or things like that, and then there's talk about Intel investing too. Yesterday, we spent quite a bit of time explaining that yesterday's drop actually didn't have much to do with whether or not TSMC is going to be invested in. We talked about a lot, probably gave 2 main reasons. If you didn't have time to watch it, that's okay. You can catch the replay of yesterday's show in the next program. If you don't have time, let me tell you, there are 2 points. The index has gone up 7,000 points, from 17,300 to 24,500, rising. So, after going up 7,000 points, a pullback of 700 points is reasonable. You could say the drop was mild. Alright, after going up 7,000 points, a 700-point pullback is within a controllable range. When something rises a lot, that's the biggest risk. A big rise is naturally followed by a correction. The market comes up with reasons. Why did it go up today? Why did it go down today? When something goes up a lot, it's more likely to fall. The Taiwan stock market should correct after a big rally. The second point is what I just mentioned. Yesterday, we talked about how foreign investors already had a lot of short positions in futures. With so many short positions, and with the Taiwan index futures settling yesterday, they pushed the price down for settlement. So, how did that affect the pressure from their hedging short positions? Their costs wouldn't get squeezed so badly, it helps ease pressure. So, I think these 2 reasons are why the Taiwan stock market had such a big pullback yesterday, dropping over 700 points. As for whether TSMC is included or not, I don't think that has much impact. It's just that the market is looking for news to talk about. Of course, today the market rebounded by over 300 points. Yesterday it dropped more than 700 points, and today it bounced back over 300 points. So what should you do? What's the move? When the market rebounds, you should look for opportunities to take profits on your long positions. That's basically it. If you didn't sell yesterday, why wouldn't you sell today, right? If you didn't get out when the market dropped 700 points yesterday, and today it rebounds over 300 points, and you still have some stocks that are making money, I think you should take profits in batches. There's nothing wrong with that, nothing wrong at all. If the price drops again, you can slowly buy back in. Why? Why does that sound good? Let me explain, let's take a look. This guy, not guy, Trump keeps sticking his dirty hands into the Federal Reserve. He just can't stop. He's got a lot of dirty hands. And he's got a lot of cronies, like wolf claws, tiger claws, reaching right into the Fed. Alright, so this time, who did he send in? Who's this eagle claw? It's the director of the Federal Housing Finance Agency, Bill Pulte. Bill Pulte is calling for an investigation into board member Cook over mortgage transactions. Why am I telling you all this? Cook, Lisa, she is. She is the first black woman on the Federal Reserve Board, which is quite impressive. Her term is very long, it lasts until 2038. So from now, 2025, there are still 13 years left. That's a really long time. She was appointed as a board member during Biden's last presidential term. So what does that mean? She's not Trump's person, she's Biden's. Now you get it, right? Her term is especially long, really, really long. There are still 13 years left, until 2038. So to Trump, she's a thorn in his side. He's probably thinking, wow, you. The chair isn't cutting rates, and if other board members aren't my people, how can I push for rate cuts? How can I make the US economy and stock market soar? That's just not possible, right? So this time, he sent out his eagle's claw. He had the FHFA director investigate someone. Investigate Cook. Cook said in 2021, he applied to buy 2 houses. 2 houses is really not much, right? For people of their status, 2 houses isn't a lot, and the loans weren't much either, only about $200,000 each. He applied for 2 houses, and then they said that in applying for these 2 houses, he used fraudulent means to get better loan terms. Yeah, like making up fake income statements and so on. That way, you get really good loan terms. Honestly, I think to some extent this is a bit of political persecution. Every time, it's like they're just looking for something to pin on him. I mean, regular folks, everyday people, often try to find ways to make their loan amounts or interest rates look better too, right? You definitely make your savings look better. You might make the amount look a bit higher, or at least make your income look better before applying for a loan. Maybe you'll ask your parents, siblings, or relatives to temporarily put some money into your account. Then, when the bank sees it, they'll think, oh, your financial proof looks pretty good, your cash flow seems solid. So the bank might give you a bigger loan or offer you a better interest rate. Right? Or, for example, if you work at one of the top 500 companies, of course your loan amount and interest rate are going to look better. That's totally reasonable. So, in order to keep your costs lower, to make your loan process more efficient, or to get better terms, wouldn't you try to make your account look a bit nicer, maybe do some beautifying of your finances? That's pretty normal, most regular people would do that. So would Lee C do it? Well, he's human too, so he probably would, even though he makes a lot of money. So what happened? Bill Built said, oh, you used fraudulent means, so we need to investigate you. Why investigate? They say it's illegal, it's just ridiculous, totally unreasonable. Why would they do that? Basically, they just want to replace Cook. So after they replaced Cook, Trump was there on the sidelines, fanning the flames, stirring things up. Trump started making statements, saying, Cook, you have to resign because you violated some kind of rules, what you did was illegal, and so on. Of course, Cook responded, don't bully me, workplace bullying is really unethical, this isn't right, this isn't good. All we can say is, Trump really would stop at nothing to put his own people in place. Seriously, he would do anything. If we count it up now, basically. Currently, the board members Bowman and Waller support cutting interest rates. Okay, so Daley doesn't have voting rights, but also supports cutting interest rates. Then, there's a new person, Lee C, taking over for Kugler. Kugler is leaving August 8th, Father's Day. So, Lee C is coming in. This new Lee C is called Milan or Milun. He's really impressive, we've talked about his credentials before, right? He became the chief economic advisor at just 41. He has a PhD in economics from Harvard. He got his PhD in economics from Harvard at 26, which is incredibly impressive. I have no idea what his brain is made of, he's just that smart. He's really outstanding. Now, he's the board member taking over as the chair. His term will last until next year, so you see, Bowman, Waller, and then Milan. At least these 3 have already expressed support for rate cuts. And then, the current Fed chair is now a candidate, and he's constantly going through interviews. So next year, it's possible that the Fed chair will be someone who supports rate cuts. And then, you mentioned Cook. If Cook were to meddle, and if Cook were to be replaced, I think that's unlikely. I don't think Cook will be replaced. After all, his term lasts until 2038, so it's probably not going to happen soon. So, if you do the math, there are at least 4 solid votes, at least 4 guaranteed votes. That's why Trump definitely hopes that more and more people will support rate cuts, so he can push forward his monetary policy agenda. I just wanted to share this with everyone first. As for this incident being repeated, it definitely won't be the only one. The Cook incident also won't be the last time something like this happens. It also won't be the last time. He will definitely find ways to bring in all the Fed officials, whether they're the chair, vice chair, or other officials, whether they have voting rights or not, and interview every single one of them. If you have even the slightest flaw, even just a tiny bit, it will be brought up and criticized, so you really need to pay special attention. Of course, if in the future more than 50% of these officials, for example, among the 12 voting members, at least 6. If 6 or more are Trump's people, then whatever direction he wants to take monetary policy, it'll be much easier for him. Right now, there are already 4. He just needs 2 more, and he can flip the situation. That's the general idea. Alright, that's it, I'm done. After finishing SSUI, good night. Which episode is about the gap up in the market? I'm not sure which gap up Mr. Jiang talked about. Are you talking about the recent one? Are you saying, that whenever, no matter what, whether it's a stock or an index, as long as there's a gap up, it will definitely get filled, is that what you mean? Oh, if that's what you mean, I'm not sure which episode it was either, because we have talked about it before. As for these kinds of gaps, I've basically told everyone that, honestly, as long as there's a gap, it will definitely get filled. The only difference is whether it gets filled sooner or later. It will definitely be filled, 100%. The gap will absolutely be filled, it's just a matter of how long it takes. You might say, hey, teacher, let's say this gap. Talking about the Taiwan stock market, the market jumps up at 18,000 points. It's at 18,000 points, but now it's at 24,000 points. You might say, teacher, there's a gap at 18,000 points, but now we're at 24,000 points, there's 6,000 points. How could it possibly come back? It will definitely return, there will absolutely be a time when it does. It's just a matter of when. Maybe not tomorrow, it won't be that fast. If it did, that would be too dramatic. Because, think about a basic concept, whether it's a stock or an index, especially an index. It's always an economic cycle. Economic cycles have ups and downs, good times and bad times. The economy can never be in constant growth forever, nor can it always be in a downturn. There will always be highs and lows. When the economy is doing well, the index will definitely hit new highs, it's easier for it to reach new highs. When the index isn't doing well, it usually means the economy isn't doing well either, it's in a recession or even a depression. So think about it, let's just look at the past 100 years. In the past 100 years, whether it's the US stock market, the Taiwan stock market, or any other, how many times has the index surged past 10,000 points? It's even dropped below 3,000 points, and sometimes, like recently, it's shot up past 20,000 points. Right? All of that has happened. So it's definitely a cycle, it's a reflection of the economic cycle, a kind of economic barometer, a window into the economy. That means there will always be highs and lows. So right now, you absolutely must not think that just because it's at 25,000 points, it'll just keep going up forever. Don't think it'll only rise and never fall. That's impossible, absolutely impossible. No index or stock in the market only goes up. It will always drop, as that's how the economic cycle works, ups and downs. The principle to stick to is that when it drops, you need funds ready to buy. Right? And when it goes up, if you're holding a bunch of stocks and the market keeps rising, you need to have the courage, and not be greedy. Don't have that greedy mindset, you need to be willing to sell your stocks. Only if you're willing to sell will you have extra capital to buy again when prices are low. So, whenever there's a gap, whether it's an upward gap or a downward gap, it will always get filled eventually. It's just a matter of time, sooner or later. Sometimes I often, when I talk about this, when I bring up this point, some people will say, no way, how could that happen? Now the market is at 25,000 points, how could it possibly drop to 18,000? That's impossible, unless there's a crash. Yeah, unless there's a crash. But teacher, it's impossible for the market to crash right now. There's no reason for a crash at the moment. The economy is doing great, so a crash isn't going to happen now. Reaching 18,000 points tomorrow isn't going to happen like that. But one day, it will get there. One day it will get there, okay? So if there's a gap over there, it will definitely be filled. Remember what I said about this. We'll verify it over time. You can pull up past indices or individual stocks and basically, whenever there's a gap, it gets filled. Basically, 9 times out of 10, maybe it's not 200% accurate, but I think more than 99% or at least 95% of the time, things go in this direction. So you really need to pay special attention to this, really pay attention. Alright, the idea that gaps will always be filled is based on the daily K-line chart. Usually, just looking at the daily K line is enough. The daily K line, the daily K level, is more accurate and more central. If you use something like the 60-minute or 30-minute chart, that's too short-term. Those hourly gaps happen all the time, and whether they get filled or not doesn't really matter that much. But if it's on the daily K or even the weekly K level, then that's different. Those have much more reference value. Okay, if you look at the monthly K line, there's no need to look at the monthly K. The monthly K is for 10 or 20-year trends, just look at the 10-year chart. So, focus on the daily K and weekly K. Good enough. Don't pay attention to hourly or 30-minute K, those gaps don't mean much, they're not significant, that's too short-term. Use the daily or weekly K as reference. Okay, that's it. Let's keep going. Wow, it's 30 minutes of talking. Let's look at the Shirley data. It's already been 30 minutes, and I haven't finished the previous presentation, dozens of slides left. Once we start talking, we go on too long. Let's look at the US weekly initial jobless claims released at 8:30. What about the numbers? It came in at 235,000, higher expected, higher forecast, and higher value. That's about 10,000 more people, but no need to worry. An increase of 10,000 isn't a big deal, honestly, it's not. As for continuing claims, 1.972 million, also higher than expected and previous figure, about 10,000 more. So overall, in this situation, looking at the number of initial and continuing unemployment claims, the overall job market is still okay for now. I think the fluctuations are still within a controllable range, specifically between 210,000 and 240,000. It fluctuates within that range, so it's fine. US stock market impact today isn't significant, just take a neutral view. Philadelphia Fed Manufacturing Index importance is low. It's minus 0.3, lower than previous, but not a big deal. It's not that important, really, not that important. So I'm just reminding everyone. As for the initial and continuing jobless claims that just came out, they're slightly higher than expected in the previous period, which means the job market is cooling down. It is cooling down, but does this cooling mean we're heading into a recession or a major crash? Not quite, not quite. So that's how we interpret it. It is cooling down, but not to the point of a crash. Now, what's more important is coming up at 9:45, at 9:45. Everyone should pay close attention to the USS and AMP wink with thumb sticking out Global Manufacturing and Services PMI for August. This is important. This is going to be even more important. Alright, let's go back and take a look. JP Morgan and Oaktree Capital have both shared some of their views on the index. JP Morgan believes that the current market pullback is actually a buying opportunity, but if stagflationary pressures appear, then their outlook would turn more pessimistic. So, is there stagflation right now? Not yet, not at the moment. It's not that there isn't any, it's just that there isn't any yet. Why do we say not yet? Because in the future, there's a possibility of stagflation, that is, the economy goes into recession while inflation spikes. Let me say it again, stagflation is the worst possible economic scenario where the economy is in decline, but inflation is still surging. That makes things really tough for everyone, prices go up, but wages disappear. That's a disaster. The pressure from costs, the pressure from equipment, that's how it shows up. What we call preemptive inflation brings a lot more pressure, but right now, that's not the case. At most, the economy is just moving slowly, cooling off gradually, and inflation hasn't surged dramatically either, so things are still okay for now. It's still there, it's still there. We can only say that we're still within the range of a so-called Goldilocks economy. But even among Goldilocks, there are different types, some are really golden, some are just average. Right now, we're more in the category of the average, not so bright gold, kind of in the middle. Alright, so last year and the year before, the gold was really golden, super Goldilocks, like bling bling bling, sparkling golden hair, and there was a lot of it too. In those previous 2 years, around 2023 and 2024, the Goldilocks economy was really fantastic, booming, and the economy was growing a lot. And inflation was really low, but this year is different. This year, it still looks golden, but inflation is starting to stir, kind of getting ready to move, something like that. If you compare it this way, you'll get what I mean. Now, there's another company called Oaktree Capital. Oaktree Capital said that right now, the valuation of the US stock market is really high. They used Buffett's indicator to look at it. So, what's the Buffett indicator? Where did Buffett get it from? He takes the total market capitalization of all publicly listed US companies and divides it by the US GDP to get a ratio. So, the total market cap of US listed companies. The US GDP ratio, 75 to 90% is reasonable. Over 120% is too high, overheated. So you might ask, teacher, 120% is overheated, but what does Oaktree Capital say? They say the ratio is at a historical high. Just how high? The current Buffett indicator is 210. The overheated level is 120, and this ratio is almost double that. Is the current valuation high? Yes, very high. Are US stocks high right now? Extremely high. It's gotten out of hand, so should you buy or sell stocks? I still stick to what I said before. If you have stocks to sell, only when the price drops later will you have the chance to buy. You'll understand what I mean later. If you sell some stocks and pocket some of your profits in batches, then when prices drop in the future, you'll naturally have the funds to buy. Okay, so waiting for a pullback and then looking for a buying opportunity is a safer approach at this stage. Now, some of you might ask, but teacher, will there really be a pullback? Will there be a pullback? Let me tell you, the market will always have opportunities for a pullback. The market will always have opportunities for a pullback. The difference lies in whether you have the patience to wait for it. Let me say it again, the market will always have opportunities for a pullback, but the difference is whether you have the patience to wait for the day when that pullback comes. If you wait and you have enough funds, then congratulations, you can buy in when prices are low. Okay, it will definitely happen, it will definitely come, absolutely, but you have to be patient and wait. Okay, but if you say you just can't be patient, you want to do something every day, okay, that's fine too. If you want to jump in and out every day, day trade, or play stocks short term, that's also possible, but you need to be alert and have a mindset for when prices are high. And keep that high-level thinking and mindset, especially right now. The US stock market Dow Jones is at 45,000 points, the Philadelphia Semiconductor Index is 5,500 or 5,600, close to 6,000, and the Taiwan stock market is at 24,500 points, all historical highs. So at these historical highs, go all in, or buy in gradually, building your position slowly, or do short-term trades. This really tests everyone's wisdom, each person's own wisdom. And when it comes to wisdom, there isn't really a completely right or wrong answer. We're just offering a relatively safer and more stable approach for everyone. Of course, everyone's investment style and tempo are different. Some people just like to do short-term trades, so if that's you, remember, with short-term trading, take your profits and get out when you can, especially now that we're in a high plateau area. But if you really want to invest more like Buffett, taking a long-term, big swing approach, buying in batches and waiting for a good, safe entry point, then you have to be willing to wait. You really need to have the patience to wait for a sudden, sharp drop, or for some unexpected negative news to hit and bring the price down. Only after that happens. That point is a good buying opportunity. Is it possible? It's happened several times. Early April, what was holiday? Not Ghost Festival. What's in April? Qingming Festival. After Qingming Festival, Trump announced tariffs. That was market. So did the Taiwan stock market crash, dropping more than 4,000 points? Was there a low point? Yes, there was. Wouldn't it have been great to buy TSMC at that time? Back then, TSMC was only 300 or 400, maybe 500 or 600. Around 700 or 800, it had already started to go up. In April this year, TSMC was about 700 or 800, which was still really cheap. Now it's at 1,200. It's just like when there's an unexpectedly huge drop like that, you have to have the guts to buy. That's what Buffett calls finding a point of unlimited investment value. That's still a good buying opportunity. But if you're someone who trades short-term, then you don't need to worry about this. You don't need to care whether it's Tomb Sweeping Festival, Ghost Festival, or whatever holiday that causes a sudden drop, it doesn't matter. Whatever Trump says doesn't matter either, since you're just in and out quickly. So everyone has their own approach. It's a good time to pay attention to the value interest rate and the overall interest rate, which are staying the same. Whether it's 4.3 or 3.8, just wait and see what's said tomorrow night, including any statements. As for the rate cut policy by the end of the year, it's still expected to be around 2 times. The US dollar index is up slightly by 0.04%, staying at the 50-day moving average, and nothing's really moving right now. Today, I'm still here to talk to you all about this. Terminal rate, 10-year rate, rate cuts, and US dollar, none of these will move tonight. Nothing will move. Big fluctuations. Tomorrow. Powell speaks tomorrow, so we'll discuss it then. Geopolitical risks, like Russia and Ukraine. What about Russia? Their deputy chairman of security said this. They said they won't accept NATO peacekeeping forces stationed there. Actually, nothing has changed. Vice President Vance also said Europe should send more troops and spend more money, instead of letting the US handle everything. So I think the US, Ukraine, and Russia will keep negotiating. They'll keep negotiating, and then see how many troops Europe is willing to send. That's basically it. They'll keep talking, and in the end, there will definitely be a way to reach a better direction. As for Israel and Hamas, just to add a quick note, he said this. What did Israel say? For now, they're not agreeing to Hamas's ceasefire proposal. Yesterday, there was talk about a ceasefire plan, right? It was about a 60-day ceasefire and releasing half of the hostages. But Israel said no, either all the hostages must be released, and Hamas must give up its military control of Gaza. There's no such thing as releasing just half, they want all of it. Another piece of news, Israel's defense minister has approved the operational plan for Gaza, okay? They're preparing to call up 60,000 reservists. Why? To get ready to go to the battlefield and fight. Right now, Israel already controls 75% of the Gaza Strip. You might say, teacher, 75% control is already a lot, so why do they want to keep fighting? Well, let me explain, based on Israel's national character in the past. Ever since the time of the Bible, from the era of Moses, let's say from Moses' time, then to Israel, and then the 12 tribes came one after another, right? Many people, because of the historical background, according to Israel's past national character and their approach to war. Their usual way was what? An eye for an eye, a tooth for a tooth. They wouldn't stop until they had completely wiped out their enemies. They wouldn't hold back, like fighting halfway and then letting everyone go. No, no. For the past 2,000 or 3,000 years, the Israeli people, their concept and habit of warfare has always been, when they fight, they go all the way, aiming to completely, 100% annihilate their enemy. If they don't annihilate you, it's not over. That's part of their national character. Now, regarding this situation in the Gaza Strip, they're planning to ramp up their military operations. In my opinion, in the end, Hamas will probably be completely wiped out, because this time they've rolled out something called the Second Mechanized Vehicle. Let me explain a bit about this Second Mechanized Vehicle for everyone, okay? When I wrote about it back then. So, some people ask me, what exactly is a mechanized vehicle? Is it a specific model of armored vehicle? Is it like the M2 or the N3 tank? Is mechanized vehicle a model name? No, it's not. Let me explain this for everyone, okay? Mechanized vehicle, well, vehicle here refers to military code, meaning advancing forward, ground combat, and eliminating targets on the ground. Gideon, this is actually a person's name. Gideon is not the name of a machine, nor is it the name of a restaurant, and it's definitely not some kind of chicken shop or anything like that. It's a person's name. To put it simply, why do we use the term Gideon? There's actually a historical story behind it. Gideon is a person's name. He was actually a judge in ancient Israel. So, what is a judge? A judge was a leader who led the people of Israel to break free from enemy captivity or attacks. You can think of him as that kind of leader. So Gideon is this person. Now, in the Bible stories, it goes like this. At one point, they had to face an enemy called the Midianites. The Midianites were a huge enemy, about 135,000 of them. So what about Gideon? The soldiers Gideon led numbered only a little over 30,000. Just over 30,000 men were supposed to fight 135,000, and they really shouldn't have been able to win, so the pressure was huge. It felt overwhelming. At that time, he prayed and prayed, calling out to God, since they were a Christian nation. He kept praying, and then God spoke to him. God told Gideon, you don't need to bring over 30,000 men. You only need to take 300. You just need to take 300 men, and you can win, basically, defeating the many with the few. And later, in that battle, Gideon really did lead just 300 warriors. So sometimes, when you hear those Bible stories talking about Gideon's 300, the 300 warriors, that's what they're referring to, those 300 brave men. Alright, so this is different from the 700 or 800 Spartan warriors. It's not like those 800 Spartans. That's a different story. Gideon's 300 is a historical account. So, it means that Gideon, as the leader, led 300 people. So, with just 300 men, they faced an enemy of 135,000 and completely defeated them. They won. That's why Israel's defense minister named the Gaza operation plan Gideon Chariot 2. It's called Gideon. Gideon is a person's name, just so everyone knows. So, Gideon is not the name of a chariot, keep that in mind. Anyway, I know Israel and Hamas will keep fighting on and off, but overall, geopolitical risks will keep cooling down, so the impact on oil prices isn't significant, not much impact. Regarding earnings reports, Walmart released its earnings today. Briefly, Walmart's earnings seem good. I might discuss details tomorrow. The US stock market is fluctuating slightly before opening, so the impact isn't significant. August 28th is still more important. The earnings report at the end of the month, right? Okay, let me mention one last thing. Since we're running short on time today, let's talk about Nvidia's earnings. Nvidia's earnings will be released at the end of August, right? Let me add a bit more for everyone. According to Reuters, Reuters reported this evening, Nvidia might develop a new AI chip for China called the B30A. Its computing power is about half of the B300, and it might come with HBM or something similar. There are a lot of related technologies like NVLink, but there's an investment firm. One investment firm said that Nvidia's earnings report next week, on August 28, should still perform pretty well. However, they did raise a warning. They said that there are still some uncertainties in the Chinese market, and the company's guidance might fall short of Wall Street's expectations. They believe that if this guidance doesn't include revenue from China, it could negatively impact Nvidia's financial performance. But if revenue from China is included, let's say the H20 can actually be shipped, whether it's the H20 or the upcoming B30A, if these AI chips for China can really make money and shipments resume, and there are no restrictions, then adding this revenue back into Nvidia's financials could boost it by at least $2 to $3 billion. However, he also mentioned some potential negative factors and pressures. That is, a 15% export tariff on chips. This is something Trump mentioned before, and there have been market rumors that as long as either AMD or Nvidia is willing to hand over 15% of their chip revenue from exports to China to the US Treasury, to the US government, then they would be allowed to export to China. There have been rumors about this, that Nvidia could export to China if they give 15% of their revenue to the US government. That's the situation. So, as he said, this 15% chip export tax, combined with the fact that China might gradually switch to using domestically produced chips, could maybe put significant revenue pressure on Nvidia. But overall, they are still increasing their holdings and have even raised the target price. So I think, Nvidia's earnings report at the end of August should still perform well. I actually think it will perform very well. As for whether it will be just good or exceed market expectations by a lot, I'm not so sure, because the market is demanding even more now. After all, Nvidia's stock price is now above $170. Recently, it kept hitting new highs. So, if you look at yesterday's slight drop of 0.45%, it actually broke below the 20-day moving average in the short term. Yeah, it broke below the 20-day moving average. Alright, Emma, thanks for sharing. Good evening. So, it broke below the 20-day moving average. If the 20-day moving average fails to hold, it could approach the 50-day moving average. In the short term, if you have Nvidia stock, consider carefully. Alright, I'll say it again. If it were me, and I had Nvidia stock in my hands, I would stick to my usual approach. That is, whenever it hits a new high, I'd sell a little bit. If it drops, say, to the 20-day or 50-day moving average, I'd buy a little more at those lower points. But as soon as it reaches a new high, I'd sell a bit, and if it dips, I'd buy. That's the way I'd operate, repeatedly raising my base in this kind of pattern. I think taking it slow, buying low and selling high, and trading back and forth like this might be a safer strategy. I'm sharing this for your reference, specifically regarding Nvidia. Regarding the market's earnings reports, I think next week we'll also have analysts tracking and discussing Nvidia's earnings with everyone. Lastly, just to mention Tesla, the Wall Street Journal reported that Musk has apparently given up on starting a new political party and is now focusing on his own companies. He said so himself. Musk doesn't want to anger the Republican Party, and maybe after 2028, in the presidential election, he'll support someone, possibly the current vice president, Vance. However, one of Musk's close friends said that he hasn't ruled out the possibility of creating a new political party. What would his new party be called? It's called the American Party. In fact, it has already been established. Yes, it's already been set up. The only question is whether it will really take off and develop, because right now, it hasn't. He said that as the midterm elections approach next year, during the elections for the House and Senate, maybe Musk will change his mind about whether or not to officially launch this party. As for Musk, today he also came out to deny and refute these claims. He came out to deny it, saying that what the Wall Street Journal wrote was wrong. He didn't say he would absolutely not form a new political party, nor did he say he wouldn't get involved in political matters. Hearing Musk say this made me feel a bit uneasy again. Why? Because it shows that his political ambitions are still there. His political ambitions aren't over yet, they're not finished. So what does that mean? It means that, to some extent, his focus on his main business will inevitably be affected. His attention will definitely get distracted. So, as the saying goes, the deeper Musk gets involved in politics, the less likely his stock price is to rise. The more he gets into politics, the more the stock price will fall. That's basically the idea. Yesterday, Tesla's stock dropped by 1.64%. Of course, this is also related to the overall pullback of the 7 major tech stocks in the US market. Next, we still need to see if this triangle consolidation can hold. If it does hold, and there's even a chance for a breakout in the future, or if it can at least stay above these 3 moving averages, then there's no need to worry too much. For Tesla to perform well, the first thing is for Musk to really get back on track. Don't keep talking every few days about starting a new political party, or about who you support or don't support, or getting into spats with Trump and trading insults, or saying this person is bad or that person is this or that. Don't do that. Just focus on your main business, do your job well and thoroughly, and your stock price will naturally go up. You're already the richest person in the world. There's no need to get involved in politics or things you're not really good at. Just wait until 4 years later to talk about it. Isn't that much better? Of course, he won't listen. He definitely won't listen. So, as I said before, let's just see what happens. The more Musk gets involved in politics and making noise, the harder it is for Tesla's stock price to go up. Especially when he bets on the wrong side. What does it mean to bet on the wrong side? It's when he goes head-to-head with the current ruling party. That's what we call betting on the wrong side. If you don't go head-to-head with Trump or anyone else, then maybe it's okay. Trump might even support Tesla's main business or some of his other investments a little bit through policy. But if you go head-to-head with him, then both your main business and your side ventures could be seriously affected. Alright, so what about Tesla? Yesterday it dropped about 1.64%. This downward channel, if there's a breakout, if it breaks through, that would be good. But right now, it still seems stuck, clinging to that area, hasn't broken through yet. So, it just keeps fluctuating. As for individual stocks before the US and European markets open, Western Digital is up 5.4%, and HPE is also up 3.28%. Both have positive earnings news related to them. As for Advanced Micro Devices, AMD is up 1%, and Corning is also up 1%. The company had been dropping sharply recently, from around 190 down to about 150 something, if I remember correctly. Yesterday, it hit the seasonal moving average, touched the 50-day moving average, and there was a bit of a contraction. Today, in pre-market trading, it rebounded by 1%, not a lot, but we can say it's a short-term rebound after a pullback. Also, Nvidia is up 0.8% in pre-market, and AMD is up 0.7%. As for declines, there aren't many companies falling. Walmart is down a bit in pre-market trading. Firstly, Solar Energy and Gilead Sciences both dropped about 1%, and Applied Materials also fell 0.9%. Overall, I think the US stock market is still maintaining a high-level, volatile consolidation pattern today, and that hasn't changed. As for when there will be more significant fluctuations, that remains to be seen. We're basically waiting for the start of the Global Central Bank annual meeting today. Especially tomorrow, when Powell will speak at the Global Central Bank annual meeting. Will his remarks be hawkish or dovish? Or will his tone be more neutral? At the show's start, I taught everyone how to judge if his remarks are hawkish, dovish, or neutral. If unsure, you can review the program's beginning. We spent time explaining this. If you understand, you'll likely have a good idea if the US stock market is likely to go up. It's still on the lower side. As for the Dow Jones Index, yesterday it edged up by 0.04%, staying above the 20-day moving average, which is pretty good. You know, the Dow is a very important indicator stock for Trump's administration. So, with the Dow up 0.04% and holding above the 20-day moving average, there's no need to worry too much. What about the Philadelphia Semiconductor Index? It's now corrected back to the 50-day moving average for the second time. This is the second time, and as TSMC said, after a big rally, a pullback correction is something to watch. It's fluctuating around the monthly and quarterly moving averages, and it hasn't turned bearish. But with this short-term volatility, buy on dips and sell on rallies, buy low, sell high. Take profits when you have them. As for the Magnificent 7 index, it dropped 1.11% yesterday, but fortunately, it's still fluctuating around the 20-day moving average. Overall, it still belongs to a very strong group. So, how should we look at it going forward? I think tomorrow night's Powell speech will be a very, very important event. For tonight, just pay special attention to the S&P wink with tongue sticking out and the global PMI data from the US. That should be enough. Alright, that's all for this psycho-related content, bringing you the latest updates before the US stock market opens. And when class is over, don't forget to give us a like. Subscribe and share, too. Lastly, I wish everyone smooth trading, and I'll see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.